Buy cash flowing rental properties for under $5,000. For rental property, most banks want to see you put 20% down and then have reserves, sometimes up to 6 months or a year of reserves, which are the payments, the taxes, the interest, the principal, those things, a mortgage in your bank account. So in other words, if you're looking at doing something with a traditional bank, you're probably $30,000 or more to make this happen. $30,000 would be on the low end. However, I've done plenty of rental deals without spending that much cash out of my pocket, and I want to show you how to do it as well. This is one for the whiteboard, so we're going to jump right over there now. So typically when you're doing any type of a loan with a bank, they typically want 20% down. If it's a non-owner occupied, right? Non-owner occupied. The idea with this is there's more risk, and they also want to see that you have reserves, which is typically, let's say your monthly payment is $1,000, and that includes tax, principal, PITI. If you don't know what that is, it's principal, interest, taxes, and insurance is basically what we're talking about here. So if they want 6 months reserve, that's $6,000. If you're buying the property for $100,000, let's say 20% down is going to be $20,000 plus 6. You're into it at least $26,000 in order for you to get a deal like this. Now, the problem is you're kind of at a catch-22, okay? So banks don't want to lend on properties that need work. So if the property needs new kitchens or bathrooms or the toilets are leaking or they have problems where a bank's going to be like, no, we don't want to lend on this. Banks want to lend on properties that no one's going to have to spend extra expense in order for them to have the property. Let me explain what I mean by this. The idea is if the bank went ahead and gave you a loan and the property needed a bunch of work, their concern is you may not have the money to put that work into the property, and that property could deteriorate, leaving them with an asset that's in bad condition that they can't go ahead and resell. So how do you get a good deal if the banks don't want to lend to you if a property needs work? How do you get a deal without putting a whole bunch of money down? And is it possible to actually get zero cash to close? Well, let me show you a way that it can actually work. Let's jump back to the whiteboard here. Basically, we've got this scenario. So let's use that same scenario, because if this house actually needed work, let's say the rehab on this house was $20,000. Now you'd be into this property $46,000. And that's if the bank will even give you the loan because the property's in bad condition. And most times the answer to that is no, we will not. Okay. So I want to introduce to you what is called a BRRRR deal. It's a buy, rehab, rent, refinance. So buy, rent, rehab. I keep getting that wrong, guys. It must be a Monday. Buy, rehab, rent, and refinance, okay? The idea with this is you're gonna buy the property with a hard money lender, because here's the deal. Hard money lenders are happy to lend on properties that need work because they're lending on the hard asset, not based upon your credit, your income, and all those different types of things like a traditional bank would. The bank's basically saying, what's the likelihood this guy is gonna be able to repay us? The hard money lender is saying, what's the likelihood if this guy screws up, we'll still get our money back and hopefully some interest? That's basically what a hard money is looking at. So if we're doing that, you're getting a hard money loan, okay? Now, most hard money lenders will lend 70% of the after repaired value, okay? So let's just say in this example, let's just say that the home that you're buying is $100,000. That's your purchase price, okay? And let's say that it needs, this is purchase, and let's say that it needs $20,000 in repairs. I'm trying to keep it similar to our other one. So it needs $20,000 in rehab, right? So that's $120,000 is needed to make this transaction happen. So how do I know what the hard money lenders are more than likely going to do? Well, we use our handy dandy calculator here. 120 divided by 0.7 is going to give us 171,000, okay? So if you've got a hard money lender that is willing to lend you everything as long as it's under 70%, you could get this deal done. If this property was worth $175,000, let's call it just for easy numbers, then a hard money lender, a good hard money lender, will give you your purchase and we'll give you the rehab. And they'll also give you some money for the payments so you don't have payments for, say, 5 months or something like that, which gives you the time to buy it, gives you the time to rehab it, gives you the time to rent it, and gives you the time to refinance it. Now, let's back up just for a minute here, because there's one thing that's very critical to this whole BRRRR strategy. This BRRRR strategy only works if you can qualify for a traditional loan, because when it comes time to refinancing, you're not going to be refinancing with a hard money lender. You're going to be getting a traditional loan. So they're going to want to make sure that your debt to income's in line. They're going to want to make sure you have good credit. So if you have bad credit, this strategy isn't going to work unless you have a credit partner that's going to be refinancing that property, and then the strategy will work. So it's something you just have to keep in mind here. But just realizing refinancing is using a traditional bank. But one of the big pluses with this is the income you're getting from the rents will credit towards your overall income, which will make your debt to income not as bad. So let me explain what I mean by that, okay? Let's say you were trying to buy this property and you had 0 rents because the property's in need of rehab, and so you don't get any rents, but you've got $1,000 a month in that payment, right? So they're saying, well, you're not getting anything and you're having to pay that $1,000 a month. Where in this scenario, okay, we're talking a rate and term refinance. And with a rate and term refinance, we're saying, well, you know what? We rent the property for $1,500. The payment is going to be $1,000. So we actually cash flow $500. So this actually increases. This increases your debt to income ratio, where you have a better debt to income ratio, where this decreases it and makes it harder for you to get that traditional loan when you're trying to do the refinance, okay? So that's what we're talking about here. So before you start with any of this though, there's 2 players you've got to make sure you have in place. Number 1 player is you've got to make sure you've got a good hard money lender. You've got to make sure this hard money lender is willing to make the purchase, the rehab, and you know what they're looking for so that you can find the right deals, okay? That's number 1. Number 2 is you have to find your takeout finance lender. Who's going to be the one that's going to do a rate and term refinance, basically saying pay off your existing loan? Who's going to be willing to do that? Have them pull your credit, get a pre-approval letter, because your hard money lender is going to want that pre-approval letter and want to talk to that lender and say, I just want to make sure all this is going to work. And one of the big things they're going to be asking is, okay, how long will it take for you guys to do a refinance? How much seasoning do you need? How long do you want them to be on title? And lots of them will say somewhere around 6 months. And so if they can do a refinance within 6 months, as long as the value's there and they're willing to do 70% of the value, then they can refinance, pay off the lender, and they're into this with very little or no money, which I want to talk about here in just a minute. So as we jump back over here, what we're basically saying is, first step is to get your hard money lender. Second step is to get your long-term traditional loan that's going to be doing this refinance, okay? Third step is to find a great deal. Now, I'm not just saying a good deal, I'm saying you have to find a great deal, because if you want to get into a deal where you're less than $5,000, you've got to find a property where for the purchase, the rehab, the closing cost is all going to be under $120,000, and the value of that property is $175,000. So we need a little more space here. So let's do this. So if the property is valued at $175,000 ARV, after repaired value, okay, and you're buying the property for $100,000, which is your purchase, and you've got $20,000 in rehab, and let's just say you've got $4,000 in title and those things, it's probably going to be a little bit more than that. But basically, if you do that and you've got the right hard money lender, they'll lend you $120,000, which will pay for all these things as long as the after repaired value of the property is $120,000 or is $175,000. Now, this gets even better because most of your takeout finance lenders are going to go up to 80%. Okay, so even if this value comes in a little less than you're thinking, let's just say it's 175 times 0.80, most of them will go up to $140,000 on your loan amount. So let's say you ended up having to put a little more money into the property than you thought. Let's say a sewer line breaks and you had to come up with $5,000 additional money or $7,000 additional money. You may be able to get some of that money back as you do the refinance. Now, other lenders will say, nope, we're only doing rate and term. We're not doing cash out, which is probably the easiest thing because your rate's going to be better. Cash out basically means you're getting some money from it. Now, rate and term refinance is saying we're just paying off the existing lender that's there, which to a bank is a lot less risk than having to give you some cash that you can go to Disneyland and just blow it. So how can you do this? Well, you do this by finding a great hard money lender that's willing to do purchase, rehab, and payments and closing costs and wrap all that in. That's the first thing. The second thing you've got to do is find a takeout financer. Now, this could be a credit union, this could be a bank, this could be any type of institution. But what you're basically going into them and saying is, hey, if I have a property with a hard money lender and I have fixed this property up and it's in great condition and it appraises for $175,000, what loan to value would you be willing to give me? And how soon after the purchase would you be willing to give that to me? So first question is, hey, what percentage loan to value? 80%, 70%, those types of things. That's what I'm asking for. Typically, they're going to go up to 80%. Second question is, how long from the time I purchased the property would you be able to do the refinance? How long do I need to wait or season? Okay, so they may say 3 months, 6 months, 12 months, whatever that case is, you need to find that out. Then the next question is, will you allow cash out? And if so, what does that do to the rates and terms? And if not, if you'll just do a strictly rate and term refinance, what is that going to look like? What are those interest rates going to be? Once you understand those things, then you can get an idea what that payment is. And with that payment information, you can get a good idea of how much cash flow you'll make based upon what's renting in the area once you do the takeout financing. Now, if you can do all of this and not have more than $5,000 into this deal, you literally have bought a property with little to no money down. Because the hard money lender is giving you the money for the purchase, the rehab, the closing costs, and the payments on the front end. So you've got 5 months without payments. Then what's happening is you're getting the rehab done, property's all rehabbed, and you are going to get that refinanced. And then the difference there, you are going to make a spread between what you have to pay in your payments and what you're able to rent the property for. And that is called profit, okay? And that's cash flow. Those are things that we're looking for. Now, how do you do this if you have bad credit? Because you've got to have decent credit to be able to go and do this refinance. I hinted to this a little bit earlier, but there's a couple of ways to do this. Number one is love money, okay? Anybody that loves you that has money. So lots of times there's people that have money that's doing very little for them or not much for them. And so there's a situation where you can say, hey, what if you brought some money and then we do all this rehab and then we refinance the property? Let's say that the hard money lender can't get you the full 120, can only get you 110, and you need 120. How can you come up with that difference? You can find somebody that loves you and say, would you be interested in investing? I'll pay you an interest rate. I'll give you a percentage of the deal, whatever the case may be. You want to get everything in writing. You want to be very careful with this, but that's something you can do. The other thing a lot of people don't realize is retirement accounts. If you have a 401k or any of those types of things, IRAs, you can roll those over into a self-directed, meaning you get to decide the investments and you can roll that into an investment property like this. Now, there is some commingling you have to make sure you don't get into, but if you're going to do that, then the investment is owned by your retirement account exclusively. You're not getting any benefits from that, but all that money is going into a retirement account, which can work out really well. Okay, so that's the thing. The other thing you've got to really make sure is this hard money lender is going to be able to lend you up to 100% of the purchase price. 100% purchase, rehab, closing costs is ideal because that would mean very little skin into the game or money you're having to put out. So this is the strategy on how you can buy a rental property for less than $5,000 in today's market. If you'd like to read more about getting 100% financing on BRRRR deals on our website, dohardmoney.com, just click on the link on the screen and you can check it out.